Right. So now let's look at bank deposits and cash expenditure. Bank deposits and cash expenditure. I need someone to read for me, and then we'll take an illustration. I need someone to read for me. Okay, continue.
Okay. Bank deposits and cash expenditure methods. This method computes income by showing what happened to a taxpayer's funds. It is based on the theory that if a taxpayer receives money, only two things can happen. It can either be deposited or it can be spent. Illustration questions.
Okay.
Question 1.
So before you continue, you get the whole idea. So any money that you put in your account, it can either be what? Any amount you make, it can either be saved or it can be what? It can be spent. If somebody gives you money, you can decide to spend it or you can decide to deposit it in your account. Do you understand? Does it make sense? So
yes,
what happened to your funds? So we are saying that Amma runs a boutique here in Kumasi and she reported taxable income of 200,000 for the year. However, her bank deposits for the year total 250. Additionally, her cash expenditure like rent, utilities, shopping, everything was 30,000. And the GRA is investigating whether Amma has fully reported her income using the bank deposit and cash expenditure method. So what do we mean here? If we look at it carefully, her bank deposit was how much? How much was the total bank deposit?
250,000.
250,000. Okay, good. We put that down. And then what's the total expenditure?
30,000.
30,000. Okay. That means that all things being equal, the total amount she would have received, because you must receive money to be able to deposit some, and to be able to spend some. True or false?
True.
So that means your total receipt should have been what? 200 and what?
80.
280,000. Thank you. But how much was declared to GRA?
200.
200,000. So does this method make sense now?
Yeah.
So it means how much has she not declared?
80,000.
So this is an under declaration, 80,000, meaning this constitutes a declaration risk. You see how tax audit is very simple. When you understand it, it's straightforward. I hope it makes sense.
Yes, please. Thank you.
So now you understand the difference between the two methods. So now I want somebody to explain the bank deposit and expenditure methods to me, and then we proceed. Yes. So bank deposit and expenditure method. What does the method mean?
So this one, where the text that we just read says that it's based on assumption that your total income would be an aggregation of all the amounts that you've deposited and the amounts that you've spent.
Yeah.
That's the assumption, that whenever you have money, you will not invest some. You only put some in your bank or you spend the rest.
Yes. So anytime that exceeds
to come up with your total reportable income, we just total the two and then see if it matches with what you've reported.
That's all. I hope it makes sense. Good. Yes. Now we have